Good day, I'm Chartered, your accounting tutor. In today's video and class, mind you, we are still on end of accounting period adjustment, and we have treated inventory, we have treated closing inventory, we have treated accrued expenses. We are on the third one, which is called prepared expenses, or what is called expenses in advance, expenses paid in what? Advance. So we are going to look at how we are going to treat the expenses as prepaid as an adjustment. What do you mean by prepared expenses or expenses paid in advance? These are expenses. These expenses are paid in the current. These expenses are paid in the current year period, but relating to the future period. These expenses are paid in the current period, but relating to the future period. What are we saying? A prepared expenses and expenses that, based on matching concept, supposed to be paid in the current year, but as circumstances arise, such expenses are paid both in the current year and in the next year or even more years ahead. But all we know is that the amount of expense that's supposed to be paid in the current year is more than what was supposed to be paid. Then the other amount will be taken to the next year or the period ahead. That is what is called prepared expenses. So how do you handle prepared expenses? First, let's look at what is called a trial balance extract as at 31st July 2025. This is how a question will appear, whereby we see electricity bill. Electricity bill was paid 80,000. If you see this amount, this is the actual amount that was paid during the accounting posting in the ledger. It means it was either paid by cash or was paid by check, and the account was balanced, and the balance brought down was taken to the trial balance. So if you see this amount, it means the actual amount that was paid by the business during the normal account period. So this is the 80,000 that was paid by the business. Then coming down the additional information, I have three separate additional information on one item to explain the different way how you can see prepayment. These are the different ways that examiners give concerning prepayment, or these are the different ways prepayment can come in accounting. So that is why I am going to address it any way it comes. My learner should not have any issue on how to handle it, and that's why I always say that follow my video, because this detail, it is not all tutors will bring it out, or it's not all textbook you find all this detail inside, but I'm going to bring it all to give a very sound foundation in accounting. Let's look at the first one. The first one says prepaid electricity was 10,000 as at 2025, meaning there was a prepaid amount after the 80,000 that was paid, 10,000 after it was in respect of another year. Look at this, another scenario. It's saying that electricity paid was for 5 quarters. Here, the amount is not mentioned, but they're telling you that the 80,000 that was paid is for 5 quarters, meaning there's a prepayment. I will explain as we go ahead. Next, we are saying electricity paid was up to 31st of March 2026. What are we trying to say? We are saying that electricity was paid up to another year. This is 2026, while the current year is 2025. Then, so if electricity was paid up to another year, up to May, then it means there is prepayment. Here too, the amount is not mentioned, but by way of calculation, we are going to bring it up. Let's quickly look at how we post in the journal first. Let's look at the first one. The first one is straightforward. All we know is that prepaid electricity was 10,000. In this case, all prepayment are deducted. All prepayment of the current year as against the next year are what? Deducted. They are deducted. So in terms of prepayment too, I forgot to put it here, but also know that we have two types of prepayment. We have prepayment of the current year and prepayment of the previous year, just like the accrued expenses. Here too, we have prepayment of the current year as against next year, or prepayment of the previous year as against the current year. I didn't capture it, but mind you, just like the accrued expenses, prepayment also had two types: that of the previous year to the current year, and that of the current year as against next year. So the one I'm treating here is that of the current year as against the coming year or the next year. So let's look at how we handle that of the current year as against the next, which is the most common one. That is why I decided to exclude the other one. But if I have a challenge, I'll come back and still address how you handle prepayment of the previous year as against the current year. Now let's look at this. Here I told you that this you open what is called electricity account. Inside the electricity account, what you do in the electricity account, you now first bring your electricity bill, which is found in the trial balance, as you can see, 80,000. You come and debit it in the electricity account, which we found in the debit side. It is clear that the electricity will be debited because it's coming from the trial balance, the debit side, and also debited. By the way, all expenses are debited by way of what? Principal. Then the next thing is for you to handle what is called prepayment. So prepayment here, it is 10,000 naira. Prepayment is 10,000. That is the balance of electricity that was paid as against the next year. How do you do it? You take it to the credit side. You take the credit side because it's going to be a deduction. Because if you prepare an expense in the current year as against the coming year or against next year, I mean to say, it become a deduction. So if you want to deduct, it means you must post it in the credit side. So posting it in the credit side here, which is the credit side, then by way of balancing, if not say it, 80,000 minus 10,000, it will give you 70,000. That means if there's prepayment, by the time you deduct 80 from the 10 from 80, you get 70,000, which will now serve as the balance. So serve as the amount that we charge in the profit or loss under operating expenses. And this account is well balanced. This 80-80. Remind you, if you go to operating expenses, what you charge as electricity will be 70,000, meaning the amount that is paid in advance have been removed from the actual amount paid, proving the principle called the matching concept. We want to get the actual amount of electricity that is paid in the current year to prove what is called the matching concept of accounting. But mind you, now that you create what is called prepaid electricity, this now gives an account called prepaid electricity account. Prepaid electricity account. Then a corresponding entry, because any credit entry is called an entry. Any credit entry must have a corresponding debit entry. That it means you are coming to debit your prepared electricity as it's coming from electricity account, which is the corresponding entry. This is credited, this will be what? Debited. Then now that you debit, this is the only transaction or entry that is found in this account. The next thing is to close the account. How do you close? You know, is to balance the account. Then you have at the end of 31st to 2025, you now say balance carried down, which is 10,000. Then anywhere there's a carry down, there must be a brought down. Now say on the 1st of 2026, balance brought down is 10,000, meaning the prepaid expenses will be carried forward for the next year, which is 2026. So that is how to handle it. So meaning this now, as you prepare your adjusted trial balance, as I said, the adjustment will appear in the adjusted trial balance showing 10,000 as a prepayment for the next year. Let's quickly look at the next scenario, how prepayment can also appear. Look at this one. Here we are saying electricity paid was for 5 quarters. Electricity paid was for 5 quarters. First, you have to understand that the amount is not given, but I say electricity paid, meaning the amount that was paid that appeared the trial balance was for 5 quarters. It means it is more than a year. So the excess is considered as a prepayment. So let's quickly look at how you work it out. Come to the working here and see everything clear. You now come and say working, which is working one. You turn the working electricity. You want to know the prepayment of electricity given that kind of scenario. What do? The first thing you understand is when I say the year is made up of 4 quarters. You don't know it today that a year is made up of 4 quarters. A quarter is 3 months. So we say 3 times 4 will give you 12. Meaning 4 quarters mean 12 months. But we are saying that the electricity was paid up to 5 quarters. Up to 5 quarters. They mean 5 quarters is how many months? If a quarter is 3 months and we're talking about 5 quarters, it simply means you are saying 3 times 5 give you 15 months. Meaning the electricity that was paid here was for 15 months. That means if a month is made up of 12 months, the year is made up of 12 months, it means there is 3 months ahead of the year. 3 months ahead of the year, that means it is a 3 months ahead of the year that become the prepayment. The extra 3 months that the business paid become the prepayment. For you to know the amount after the 80,000 that was paid extra in 3 months, it becomes simple arithmetic. Whereby now say 3 after the 15 months that was paid times 80,000. For 80,000, which is the electricity amount, if you multiply this, you get 16,000. That means the prepaid amount becomes 16,000 naira. This is what was paid ahead. Then if you now minus 16,000 from this, then you know what was supposed to be for electricity in the current year 2025. That is all. But the treatment, as I told you, by the time you get the prepayment to show it in the ledger, become the same thing. Prepayment remain prepayment. So if you get 16,000, the way you handle it in the ledger is the same thing. The format has been shown. Go like this, follow it up, and you still use 16,000 just like it's used in respect of 10,000. But it is a scenario I want you to understand, because these are the things you meet in real life questions or in real life situation. Let's look at the third scenario. Here we are saying that electricity paid was up to 31st of March 2026. The current year is 2025, but they are telling that the electricity was paid up to 31st of May 2026. It is more than in 2025. That is in another year. Then first you understand that a year, which is matching concept, is 12 months. So if it is paid up to another year, which is 2026, up to 5 months, it's simple arithmetic. Let's come here and see how you work it out in case you see it in any examination or any question. It is clear that you can say that the year is made up of 12 months, which is everybody know, and we are saying it was paid up to another year. And another year, how many months are they made? From January to May is 5 months. Then we are coming to calculate it out as a simple arithmetic, where when I say the prepayment in electricity become 5 divided by 12 times 80,000. Then give you a prepayment of 33,033 the order approximately. So this is the answer here. Some learners will be confused. Why is it that here we are saying 3/15, while here we are saying 3/12? There's a difference. Here we're talking about quarters. If you're talking about quarters, you have to be adding the number of months that make up the quarter, what we get. But here we're talking about in the real life months. So if the question is talking about quarters, you must go with this scenario whereby you count the number of months in the quarter and divide it by the number of months extra. But coming to a situation like in this scenario, the language, you must follow by saying how many months are in the older year, divide by 12 times by the amount paid for you to get the prepayment. So this is how to handle such scenario, and I bet you these are the common areas to see even in the practical life or in examination or at any level. These are the possible ways you can see prepayment being handled as an adjustment. Mind you, don't forget to follow my video, like and comment, because more of this will be coming as we treat provision for bad debt, or what we call allowances for expected losses, bad debts, depreciation, and many other adjustments which I'm going to handle here live and direct. I'll be able to understand if you're able to follow me without missing any of my videos. We have not concluded, because I am still going to show you how the prepayment will be used in the profit or loss account, and also will be used in the statement of financial position. Please don't forget to like my video, share and comment, because more will be coming for you to get a sound foundation, a safe journey in accounting. Thank you, and remain chartered.